Hello everyone, Adam here with Livingston Financial, and today we're going to be covering one of my favorite topics ever, Vanguard Funds. And when I say one of my favorite things ever, I am not exaggerating in the slightest. Investing is right up there with coffee, steak, meditation, binge watching my favorite sitcom of all time starring Bob Saget, Full House. I freaking love investing. It's probably my #1 hobby in the world. And if I had to pick the #1 best investment option, it would probably be Vanguard Funds. So for those of you out there who are new to investing, Vanguard is essentially a company that issues mutual funds and ETFs. They are the second biggest issuer of ETFs in the world and the largest issuer of mutual funds. Vanguard is known for having the lowest expense ratios in the entire industry. And an expense ratio is essentially a fee that Vanguard is going to charge you for holding the shares of a mutual fund or ETF, whatever you buy. The expense ratio is measuring how much of a fund's assets are used for operating expenses. So the formula for an expense ratio is the total cost of the fund divided by the total assets of the fund. This information is relevant to investors like you and I because the higher the expense ratio, that means less money in our pockets. For example, the Vanguard S&P 500 ETF tracks the performance of the S&P 500, and it has an expense ratio of only 0.04%. That means for every $10,000 you invest in this fund, they only charge you $4. To put this into perspective, a similar fund from a non-Vanguard company like the T. Rowe Price Equity Index 500 fund has an expense ratio of 0.21%. So they're going to charge you $21 instead of the $4 like Vanguard does. That is over 5 times the expense ratio that Vanguard is. Passively managed funds like index funds are usually going to have a lower expense ratio than actively managed funds like mutual funds, but for most of the time, Vanguard is going to have lower expense ratios all across the board. Another benefit of Vanguard funds is that you do not actually need to open an account with Vanguard in order to invest in their funds. Me, for example, I have an account with Wells Fargo, my Roth IRA, and I go in, buy whatever Vanguard funds that I need, and I want to point that out because I feel that's a common misconception when people want to get started using Vanguard funds. Today I'm going to go over my top 5 Vanguard funds for 2020, and I have both ETFs and mutual funds in that top 5. I will be sure to let you know which one is which because mutual funds will typically have a higher minimum investment amount. All right, let's get started with number 5, which is VFIAX, the Vanguard 500 Index Fund Admiral Shares. The Vanguard website describes VFIAX as the industry's first index fund for individual investors, and it's a low-cost way to gain diversified exposure to the US equity market. Investing in this fund is a great way to simply invest in the 500 largest US companies. Just by buying a fund like this, you're going to have great diversification and low risk because the fund spans many different industries and it accounts for 75% of the US stock market's value. VFIAX is a mutual fund. It has an expense ratio of 0.04% and a minimum investment of $3,000. Its 10 largest holdings are Microsoft, Apple, Google, Amazon, Facebook, Berkshire Hathaway, JP Morgan and Chase, Johnson & Johnson, Visa, and Procter & Gamble. Now, the average annual returns of VFIAX are pretty stellar. It's returned about 31.4% over the last year, 15.2% over the last 3 years, 11.6% over the last 5 years, and 13.5% over the last 10 years. You cannot argue with that return. Pretty solid numbers. Number 4 is a tie between 2 mutual funds that I buy, the Vanguard Star Fund and the Vanguard Target Retirement 2035 Fund. One of the reasons I like these 2 mutual funds so much is because they're so cheap. One is $21 and one is $27 as of the filming of this video. So whenever I have some money left over from a larger investment, I will just buy some Star Fund and I will buy some Target Retirement 2035. Now, VGSTX, the Star Fund, is about 60% stocks and 40% bonds, which is a pretty conservative distribution if that's your thing. I don't personally recommend being too conservative right now because the stock market is on fire, but hey, you can do you. Another cool thing about the Vanguard Star Fund is that this provides a way for for you to invest into 10 underlying actively managed Vanguard funds, including domestic and international stocks. If you want to save for retirement with as little effort as possible, this could even be considered a one fund option where you're going to have enough diversification and enough bond allocation to where it's pretty conservative and you can just put all your money into the star fund and let it ride. Now this fund's expense ratio does come out to 0.31%, which is considerably higher than the ones I previously mentioned. However, Vanguard's website does claim that this is 62% lower than the average expense ratio of funds with similar holdings. VTTHX is the Target Retirement 2035 fund. Now this one is unique in the fact that as 2035 gets closer, it will incrementally shift to favor bonds over stocks because it wants to get more conservative as you approach retirement age. I believe that this was my first ever Vanguard fund that I bought because when I was first getting into investing a few years ago, I read that one and thought, yeah, I want to retire in 2035. So that was, yeah, the first one I bought. VTTHX does have a minimum investment of $1,000 and it has an expense ratio of 0.14%. It has a lower return since its inception because it did go through the 2008 financial crisis, but over the last year it has returned 23%. So my contributions to this fund have returned nicely, so I say that you should go for it. Now remember kids, this is not financial advice, this is just my opinion. So before you go off and try to hire a lawyer to sue me, just remember that. Number 3 is VYM, the Vanguard High Dividend Yield ETF. Now I love this one because this basically tracks the performance of companies that have a history of paying out high dividend yields. If you don't know what a dividend stock is, essentially it's a stock from a very well-established company that has a history of paying out dividends to its shareholders. Now this dividend could be given out monthly or quarterly or even annually, and it can also be in the form of a cash payout or additional stock. Now I do want to do an entire video on dividend stocks in the future, and I will. However, just know that between 1926 and 2015, dividend income constituted 33% of the S&P 500 monthly return, with the remaining 67% coming from just regular capital appreciation. Buying VYM is a very convenient way to track the performance of stocks that are forecasted to have high dividends. If you look at the 10 largest holdings, VYM has all of those famous dividend companies, Johnson & Johnson, ExxonMobil, AT&T, etc. VYM has a very low expense ratio of 0.06%, and there's no minimum investment, so you just have to buy one share and you're good. I really love VYM, and if I was making this video a year from now, it might be my number one pick. I've been buying so much of it lately, but we'll just see what happens over the next year. My number 2 Vanguard fund for 2020 is the ultra famous VTI, the Vanguard Total Stock Market Index Fund. If you want a way to invest in the entirety of the stock market, look no further, this is how you do it. With an extremely low expense ratio of 0.03% and no minimum investment, VTI remains such a popular buy year after year. When you buy shares of VTI, you're buying 3,579 different stocks. The fund's total net assets are around $900 billion, and the top 5 holdings are literally the top 5 tech giants: Facebook, Amazon, Google, Apple, and Microsoft. Buy it, folks. Just go to your computer and buy VTI. You're gonna go to your little computer and type it away to buy the VTI. Everybody just loves to buy VTI and hold, so my number 1 pick is gonna be different because I like to go against the grain of everybody. Now, my number 1 pick for Vanguard funds for 2020 is, drumroll please, VOO, good old VOO. This is literally just the ETF version of my number 5 pick, VFIAX. But here we have the ultra low expense ratio of 0.03% and the minimum investment is $0. So literally you just gotta buy one share and you're in. I truly believe that in 2020, the best investment strategy you can have is simply to just buy the 500 best and largest US companies. These companies have a proven track record of success and performance and growth and returns, and I just think that this is the best strategy that balances the right amount of risk with the right amount of growth. I have a very simple investing strategy, so VTI and VOO are obviously going to appeal to me. However, over the last 10 years, VOO has returned 1% higher than VTI, so that's just gonna edge it out slightly for the number 1 choice. Regardless of which of these funds you buy, sitting around not investing is setting yourself up for a life of living paycheck to paycheck. Go to your preferred financial institution, sign up for an IRA, and get going today. I'm going to show you guys quick how you can browse all the Vanguard funds and just select for yourself. All right, everybody, I'm going to show you how to navigate to Vanguard's list of mutual funds and ETFs so you can decide your own investments for yourself. On Google, you're just going to type in Vanguard ETFs, and then it's going to have a Vanguard ETF list as the first option. And then it's just going to take a second to load here. And then right up here under mutual funds and ETFs, you can actually select the tabs to see which ones you want to look for. And then here you go. Here's a list of all the mutual funds. There's a bunch of US bond funds. It's separated by category, and it will give the ticker here, the asset classes. Here's your expense ratios, the price, so on and so forth. So the Vanguard website has a great resource to just go through and select all the investments that you want. So I hope that helps you guys, and back to the video. Thank you so much for watching, you guys. I hope that you enjoyed this video of my top 5 Vanguard picks for 2020. Now, if you enjoyed the video, please press the like button and subscribe. It will really help with my exposure. And leave in the comments what you think the best investment options for 2020 are. I really want to know. Leave a comment so we can get that dialogue going. I will reply to the first 100 comments this video gets, I promise. If you don't invest in Vanguard funds, do you do Fidelity? Do you do Schwab? What do you do? Let us know in the comments and tell us why that you decide to invest in those instead of Vanguard. Thank you again for watching another video from Livingston Financial. Please subscribe because I have a new video that comes out every single Wednesday and I don't want you to miss any. And also please feel free to follow me on Instagram at AdamLivingston_ or also on Twitter at ad4mlivingston. Thanks again. Have a wonderful day.